Welcome back, Focus Learners. Today, we're unpacking an absolutely monumental earnings report. We're looking at Firan Technology Group, or FTG, and their second quarter results for 2026. Look, if you follow the aerospace and defense sectors at all, you already know just how critical supply chains and reliable component manufacturers are right now. Well, FTG just released a quarterly report that doesn't just show growth, it shows a company literally firing on all cylinders, capitalizing on major industry tailwinds, and setting themselves up for a fascinating future. We're going to break down exactly how they did it in this explainer, looking strictly at the numbers and the strategic moves behind them.
But before we get into those massive financial figures, let's briefly ground ourselves in what FTG actually does. They're a global supplier of aerospace and defense electronics. Essentially, they operate as the vital nervous system for some seriously complex machinery. Whether it's high-reliability printed circuit boards for defense contractors or illuminated cockpit products and avionics for commercial jets, FTG is building the specialized, mission-critical hardware that keeps these industries moving. And in Q2 2026, demand for that hardware reached staggering new heights.
Okay, let's dive into this, because this right here is the biggest bang of the entire earnings report. FTG saw an 89% increase in bookings over Q2 of 2025. That brings their total bookings for the quarter to $86.7 million. But the absolutely vital context here is their book-to-bill ratio, which came in at 1.64 to 1. In manufacturing, any ratio over 1 means you're getting more orders than you can currently fulfill. So for every single dollar of product FTG shipped this quarter, they took in $1.64 in new orders. That's an incredibly strong indicator of accelerating future growth.
So here's our roadmap for today's explainer. First up, we'll look at those record Q2 financial highlights. Second, the strategic drivers making it all happen. Third, a breakdown of their two main segments, circuits and aerospace. And finally, we'll dig into the cash, debt, and future outlook to check their foundational health.
All right, kicking things off with Section 1, Record Q2 Financial Highlights. Let's look at the overall momentum here.
$193.5 million. That number represents FTG's quarter-end backlog. Thanks to that massive surge in bookings we just talked about, their backlog, which is guaranteed future work, remember, rose by a full 30% compared to the end of the previous year. This gives management incredible visibility into their future revenue streams, and it proves that the end market demand out there is robust and sustained.
And you know, that future demand is already translating into current top-line success. Total revenue for Q2 hit $52.7 million. Now that's a steady 8.2% bump over the $48.7 million they reported back in Q2 of 2025. While it might not seem quite as flashy as an 89% jump in bookings, steady, high single-digit top-line revenue growth is exactly what you want to see. It's the perfect foundation for a scaling manufacturing business.
But here's where the operational leverage really kicks in. While revenue grew 8.2%, adjusted EBITDA jumped 20% to $10.5 million. Even more impressive? Their adjusted net earnings hit $5.1 million, which is a massive 44% increase from the previous year. This tells us a really critical story. FTG isn't just selling more stuff, they're operating way more efficiently. Their profitability is growing significantly faster than their raw revenue.
Moving right along to Section 2, Strategic Drivers and Highlights. Let's talk about the how behind these numbers. FTG management actually highlighted 3 specific operational strategies that are currently paying out big time. First, on the defense side, FTG circuits qualified for 2 large-scale classified defense programs back in 2025. Significant orders rolled in during Q2, and initial deliveries for those are set to start in Q3 of this year, locking in some major ongoing revenue. Second, their aerospace Calgary site officially achieved profitability in 2026, and that's benefiting heavily from global sales of their AFIRE's Edge Plus product, plus continued licensing revenues. And third, they're actively diversifying their geographic risk.
So what does that mean in practice? Well, supply chains are incredibly sensitive to geopolitical tensions right now, specifically U.S. tariff risks. FTG is actively mitigating that exposure by delivering to non-U.S. programs. During Q2, they continued deliveries to China's C919 commercial aviation program. They also started ramping up deliveries for the new de Havilland aerial firefighting aircraft. By diversifying their global footprint like this, they're essentially building a shield around their bottom line to protect it from localized trade disputes.
All right, Section 3, Segments, Circuits, and Aerospace. Let's physically break down where all this growth is coming from.
And this brilliantly illustrates the dual engines driving the company right now. FTG Circuits is the larger revenue generator, pulling in $34.3 million this quarter. That's a modest, steady growth of 1.9%, driven heavily by strong demand at their U.S. sites. But check out FTG Aerospace. They generated $19.2 million, which represents a massive 21% organic growth surge compared to last year. So the aerospace segment is rapidly accelerating, and that provides a really powerful growth boost to the steady base provided by the circuits segment.
Now, we've got to note a fascinating financial nuance here. These growth numbers were achieved while fighting a pretty stiff headwind, unfavorable foreign exchange rates. Because FTG operates globally, currency fluctuations directly impact their reported numbers. The circuits division actually absorbed an $800,000 hit, and aerospace took a $400,000 hit just due to foreign exchange. What that means is the actual organic growth and operational improvement within the company were fundamentally much stronger than even the headline numbers suggest.
President and CEO Brad Bourne pretty much summed up the quarter perfectly. He stated, Q2 2026 was an exceptional quarter for FTG. We achieved record performances in nearly all financial metrics. He went on to note that they're realizing the value from strategic initiatives laid out back in 2025 and successfully capitalizing on broader industry tailwinds. Honestly, it's a textbook example of a company positioning itself perfectly to catch a rising tide in the aerospace and defense markets.
Which brings us to our final section: cash, debt, and the future outlook. Let's analyze the foundational health supporting all this rapid growth.
You know, explosive growth can sometimes mask underlying financial instability, especially if a company is over-leveraged. However, this balance sheet should give anyone watching a ton of confidence. First off, this growth isn't burning through their cash. FTG actually generated $2.7 million in positive free cash flow in Q2 alone. But the real standout is their debt profile. Their net debt sits at just $2.9 million. To put that in perspective, their net debt to trailing 12-month EBITDA ratio is an incredibly low 0.1x. That literally means they could theoretically pay off all their net debt with just over a month of their current earnings. And remarkably, that $2.9 million net debt figure even includes $9.4 million in favorable government loans. It is a rock-solid, highly conservative balance sheet.
So that leaves us with one final thought. We're looking at a company with an 89% jump in bookings, profit margins expanding way faster than top-line revenue, successful mitigation of geopolitical tariff risks, and a balance sheet that's barely leveraged at all. With a staggering record backlog of $193.5 million guaranteeing future work, FTG has built an incredibly sturdy launchpad. The question now really isn't whether they're growing, but just how high this trajectory will take them in the global aerospace and defense sector as we move through the rest of 2026 and beyond. Thank you so much for joining me for this explainer. Keep learning, and I'll catch you next time.